Back to the market. It's already experienced a number of rotations this year. My next guest says ignore all that and just focus on investing in best-in-breed companies with long runways for growth. Let's welcome in Larry Cordisco. He's portfolio manager for the Osterweiss Growth and Income Fund. Larry, it's good to have you. First of all, growth and income, do those things go hand in hand?
Yeah, Kelly. Well, I mean, thanks for having me back. They do. And in fact, we think that they're extremely complementary. If you build a portfolio's balance between the two concepts, you get obviously both capital appreciation and growing dividends over time. And especially in a low rate environment like this, if you can compound dividend growth over a longer period of time, then that is a really powerful income formula for investors.
So tell me, you have AMD, Aptiv, Google. Remind me if any of these have dividends?
These are more on the capital growth side, although Aptiv has traditionally paid a dividend. With the the cyclical downturn or struggles in autos in COVID, that got suspended. We would expect that to come back over the next year or two. But these are generally more on the capital appreciation side of our strategy.
And let's talk about Aptiv for a second. You like this because they're a leading supplier to electric vehicle manufacturers. So what are your projections here for the market and for Aptiv being able to capture more market share, or I should say total market cap, than what it's already reflecting?
Yeah, that's a great question. So currently about 4% of vehicles every year are produced, are electric vehicles. The expectations are that that's going to quadruple over the next 3 to 5 years to about 16%. Certainly, if you look at the market demand out there and you look at the commitment of General Motors and Ford and of course we all know Tesla, and Volkswagen, I guess is a very important one I'd throw in. Yeah, I think it's a fair bet that 16% is a very reasonable expectation for where EV growth or EV mix trends towards. The reason this is important for Aptiv is because they make 2 to 3 times as much money on an electric vehicle as on a combustible engine vehicle. And so if you think about the compounding profitability of that content growth over time, that's really important. The street expects around $9 of earnings in 2025. I think that if we end up getting this mix of EVs that we're talking about, it's going to be a bit higher than that.